Well, the way I look at it is those are leadership companies, particularly Amazon, that I want to own. What I would recommend, because the stocks are trading at pretty high valuations in my view, is that maybe you take some money off the table and reduce your position. But I am going to continue to hold the core stakes in those companies and some of the other FANGs.
Let's unpack these stocks individually. When it comes to Amazon, you could have used valuation as the argument against owning it for virtually its entire lifetime. So why does valuation come into play right now? What specifically are you looking at about the Amazon picture that concerns you?
Well, valuation at $2,000 a share, sure. You probably couldn't make a valuation case at $100 a share. However, momentum continues, particularly in Amazon Web Services, and what they're doing in Amazon Web Services and the traction that they have, not only in the space, but vis-a-vis their competitors, gives them a nice growth ramp. And we know that Jeff Bezos is ruthless, and he's done a very good job disintermediating many non-internet industries, and I expect that to continue.
It sounds like a reason to buy, and you're saying, you know what, I'm holding it, but I wouldn't recommend fresh money in.
That's right. No fresh money. I would rather buy it on a dip, because all these stocks, no matter how well regarded they are or what I think about them fundamentally long term, will have a bad day. They're just very volatile names. And so when they dip, sometimes I add to my positions. And when they're rising like they do now, sometimes I trim those stakes back, but I keep the core positions in most of the FANGs.
Is Amazon and are the FANGs sort of must-own core holdings for you?
Yes, I think so. And out of all the FANGs, the one that I'm frankly most worried about is Apple. And the reason I'm worried about Apple at $228 a share, even though there is one sell-side price target out there as high as $275, is the bulls on this story have been latching onto the growth of the services business. Now, that business is growing robustly. It's not growing at a cloud-type rate, which I like much more. But what folks don't realize is the services offerings within Apple, they're not sold a la carte. The ecosystem, which is, I guess, good to have, is all based on the number of iPhone users. And we're seeing a slowdown in the iPhone and the whole global smartphone market. And what happens with a lag is you will have a slowdown in the services business because they are tied at the hip. And so that's one of the things I worry about for Apple long term, where I see a longer growth runway for the cloud services businesses at Amazon, Google, Alibaba, and Microsoft.
Paul, are you anticipating regulation on the likes of Google from the government?
You know, I think that story recently is Trump just being Trump. The way I look at it is I'm very worried about tech and tariffs and the trade war with the Chinese. I'm not so much worried about accusations that Google and other social media sites have been biased against the conservatives. Because you think about it, what is on a social media site, either good or bad content, its implications to politics, that was a story of many weeks and months ago when Mark Zuckerberg and Facebook were testifying in front of Congress. So I think that's kind of old news, but I do continue to worry about the Chinese and the tariff battle.